what's going on, everybody? Christopher Inks here from TexasWest Capital, and Andrew showing up from Arch Republic. Tillman decided to take the day off. He wanted to do some traveling or something, you know. Must be nice, right?
It's not nice because he's in an airport somewhere and then making another connection. If you've ever done any meaningful travel with multiple compatriots, meaning children, yeah, it's not great. But you know, dads, we got to do what we got to do, right?
That's right. That's exactly. And speaking of which, you also are going to have to leave a little bit earlier. You got to do dad stuff. So we'll be a little bit shorter here, folks. But in the meantime, we'll go ahead and jump into it here. By the way, it seems like my mic's fine again. Once again, had an issue on Scott Melker's show this morning. I don't know what it is. The last 2 or 3 weeks, or 2 out of the last 3 weeks, just an issue with the mic. So I don't know, but. Anyway, let's jump into this. So 4 days of Bitcoin ETF outflows, everybody making a huge deal of it. But the reality is?
I just think it's asset allocation adjustments and changes. The flows associated with, out of Bitcoin ETFs are so small compared to the inflows, over the last 45 days that it's nothing more than a headline searching for an audience.
There you go.
It's not meaningful at all. I would add that, ETH ETF inflows have adjusted to the upside. And so, my thesis is that, July is the first month of the third quarter. So July, August, and September. And so in July and heading into August, we're seeing additional capital committed to something beyond Bitcoin in the crypto space. And the reason why that is because asset allocators are seeing just the enormous, huge wide lanes of open space to innovate and to grow, some regulatory clarity with the Genius Act, the likes of, Larry Fink, Ray Dalio, Paul Atkins and Scott Bessent talking about crypto as an asset class that should be allocated to. When you add all of that up, both institutional and retail clients are saying, well, maybe I should, broaden just a bit my horizons associated with this asset class. So I feel good about my Bitcoin ETF allocation. Why don't I put some into Ethereum, and that's really what's going on there. That to me, that's what's going on between the two dueling ETFs. There's going to be more ETFs that come on board, right? So over time, you'll see the scale of Bitcoin ETF flows begin to be a little bit muted because some of that allocation is going to, other ETFs in the crypto space, Solana probably being the next most meaningful one. And so if before this time last year, people were allocating 100% of their quote unquote 2% crypto allocation that they wanted to get solely into Bitcoin ETFs, now it's going to be, 60, 30, 30. So 60% of that money will go to Bitcoin, 30 to Ethereum, 30 to Solana. And just is what it is.
Your math ain't mathing, man. 60, 30, and 30?
Mm-hmm. Yeah, it's not mathing. You're right.
120%.
I was reading this Tom Lee comment while I said it.
Yeah.
60, 20,
Solana, right?
60, 20, and 20 is what I meant to say.
20 and 20. Okay.
So yeah, there's again I'm a fairly Bitcoin centric guy. Not fairly, I am Bitcoin centric. But you have, when presented with new information, you have to adjust, maybe your belief system. And the fact of the matter is that, we're in this renaissance of crypto, right? How many at the White House, crypto summits have happened this year? 3 or 4. Then we had Crypto Week. Then we had Project Crypto from the SEC. Now the SEC is coming out basically saying staking isn't a security. So we've gone from a year and a half ago where everything that you could ever touch is a security. And if you sell it to somebody, like if you've got an old bubble gum wrapper and you sell it to somebody for $3, that's a security according to Gary. To now, nothing is a security. It's all just, hey, let's just have a good time with crypto.
Dive in and go for it, right?
You can do whatever you want. It's not security. You don't have to register and do all sorts of stuff. So it's as big a shift in any industry as I've ever seen. I'm 50 years old and I've been in finance my whole life. I have not seen this meaningful of a shift in any industry from a regulatory standpoint ever. I've never seen it happen.
Yeah.
And so it's extraordinary. It's
been extremely quick. I mean, again, I don't think we've said that enough.
Yeah. The pace and speed of it all is really something. And by the way, the pace and speed of it all is going to ratchet up again come the end of this month and into September and October when we have additional crypto IPOs that hit the market.
Yeah.
So you've got additional liquidity, you've got additional quote unquote currency out there in terms of equity shares. Yeah, it's going to be something to watch. It's going to kick into an even higher gear.
Yeah, and I think you made that great point about the. Am I echoing?
No.
Okay, it's just on my end then. But anyway, about the clarity, with the Genius Act coming in, and this is something I talk about a lot when I discuss markets, is this idea that, markets abhor, everybody's always like, oh, but somebody Fed's going to come out and surprise, or this is going to come out surprise. And the reality is the market does not like surprises, right? The market likes to know what's going on. And especially if you're a company, looking to invest money or whatnot, you want that clarity. You want that. So a lot of people are upset about the Genius Act. A lot of people are happy with it. But at the end of the day, it provides that clarity. And the clarity is then what the companies can then use to go, okay, what can we do now? Rather than having to hold off because we're like, I don't know, how is the SEC really looking at this, or how is the government really looking at that? So I think that's a great point to bring up there for people to, that are paying attention. So we've got ETF outflows really just minor compared to your average inflows over the last 45 days. Mm-hmm. As you said, likely, kind of distributing a bit more now, not just into the Bitcoin, but opportunities there with ETF, with the Ethereum ETFs and potentially Solana coming up. I know Litecoin got a pop on some, Litecoin ETF news, in the last week.
Can we have a conversation about Litecoin real quick?
Yeah.
Why does it exist? What does it do?
Because people are putting money into it still. That's why. Yeah,
no, I get that, but to what end? Like, I can understand Solana, I can understand Ethereum. There are ongoing innovations happening on those chains. But what is Litecoin doing? Like, the founder of that token bailed like 5 years ago, never be seen again, and it just exists because it exists.
The way I look at it was it was the first branch off the Bitcoin chain. So it's been around a significant amount of time, and it got a lot of people into it to begin with, and they just kind of hang around in it. I mean, really, you could make an argument that it's been an accumulation or reaccumulation for the last 4 years.
The reason why I bring it up is because you could make the case that an Avalanche or an Apto, there's a lot of things going on some of these other chains. Yeah. They're being adopted at institutional levels to build rails and whatnot and all sorts of stuff. But Litecoin isn't in any of those conversations.
Yeah.
Nobody's building new systems or financial rails. There may be a project out there, but I certainly haven't heard of it. And it's certainly not big enough for any of us to hear of it, there being some sort of Litecoin stable coin, something. It's strange to me. Because at some point there'll be a Litecoin ETF. Litecoin ETF might even beat Solana to the punch, which is just weird.
Crazy. But like you said, you've been you've been in the financial world for your entire life, and you've been around for a while. So I mean, you've seen this happen before.
Yeah.
Things kind of hang around, even though they probably shouldn't. Like I said,
Well,
for me, I think maybe the biggest thing is just because it was the first branch there. It's been around a really long time. A lot of people got into it back then and just haven't really moved on. I think probably, at least as far as I can see, that would be the only reason. Like you said, there's really nothing coming out of it. Nothing's knocking on the woodwork saying, hey, we've got this project on Litecoin and this project and whatnot coming out there. So, money to potentially be made, but that's really, I think about it, speculation, pure speculation, right?
yeah, I mean, again, it doesn't move in any meaningful way beyond the wavelengths of, as altcoins move with Bitcoin, right? It stays in that channel as well. It's just interesting to see, where is the industry going to be in 2 to 3 years? Where do we go? And the reason why let's just call it 5 years, right? So 5 years, because there are these bursts of innovation that happen across sort of industrial revolution type timeframes, and they've happened in these pockets for 200 years, right? I go back to two specific ones: the automotive, so the industrial revolution that created automobiles. And in 1914, like 5% of the United States population had a car, right?
Yeah.
By 1929, like 80% of the population had a car. And then by 1950, like, half the population had two cars. But what happened at the same time, though, was that, there were 2,000 car companies in 1940, and now there's like 6 that matter, right?
Yeah.
Because even if there's 15 that matter, 7 or 8 of those 15 are all owned by one entity, right? Like the Volkswagen Group owns Porsche and Volkswagen and Audi and some others.
Right.
A Lamborghini own all those brands, right? So that consolidation happened over a period of 30 years. Then we get to sort of the digital age, right? And in 1985 to 1990, there were 1,000 computer companies, right? We could name them: the Compaqs, the Gateways, the IBMs, the Apple, the who knows what. There's a million of them, right? You could go to a Best Buy, or you could go to a CompuWare or CompuServe. I don't know. There are a bunch of big box computer stores back then that sold 75 different computers, right?
Yep.
With different logos and different names on them. And then 10 years later, 15 years later, there's like 5 that matter, that actually make computers: Dell, Apple, IBM, and like Samsung. And Sony has a division that nobody cares about because they basically make TVs. So, that same thing, I think, in some way, shape, or form will end up happening in the crypto space. That there'll be this, just continued boom of innovation. But over time, instead of there being, 3,000 L1s or L2s or whatever it happens to be, we'll end up with, 15 to 35 tokens that are meaningful. But the innovation that will have occurred in terms of the overall schema of changes to finance, of changes to banking, all of that stuff will have made, radical shifts forward, right? That even though the players will have weeded themselves out, the difference in 24/7 markets and stablecoin movements of capital and yada, 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 some things that we haven't even thought of yet, that will have been, the innovative part of it. We've gone from, I remember I bought I think a compact computer to have alongside the work that I was doing as a financial advisor back in 2002 or something. And it was every bit of this thick, but it was a laptop, right? But I thought it was awesome, right?
Yeah.
Well, compact doesn't exist anymore. And everything that was in that laptop that was that thick is probably only a third of everything that's in this now.
Yeah.
Right. There's about to be a slimmer version of this come out in September. So it's we'll go through that with crypto as well, the same way that we did with the internet, revolution, right? The internet revolution, there were 9,000 .com companies, and effectively, something like 6 of the 10 largest companies in the world are effectively internet-focused based companies that made it out of that .com bubble destruction and are now Amazon and are now, others that are absolutely, huge and upscale. So the same thing will happen in this space. It's just a question of where's, in other words, does Litecoin make it to the other side 5 years from now? I don't know. I mean, why would they? I don't know. The one thing that I think of when it comes to innovation is, look at how MicroStrategy has reinvented itself 2 or 3 times over the past 25 years, right? They're not what they were 15 years ago. They are not what they were 25 years ago. They're something entirely different now. So, we'll see. It's interesting to look back, to have some sort of compass to be able to look forward. And all of this now happens much faster than it did back in the 1920s.
Yeah, exponentially.
Yeah. So we'll see over the next 5 years, how does it shake out?
So what are you thinking in terms of, I mean, obviously we've talked about this before, and even in terms of, these Bitcoin treasury companies, the idea that there's a ton more growing right now, but they're probably going to condense down, like we've been talking here, to a few kind of ones. Obviously strategy's got to be at the top of your list there, but what are the other maybe 3 or 4 that you think have a good chance, at least as of right now, probably?
I think Jack Mahler's 21 Capital is meaningful. The reason why it's meaningful is the largesse of the capital backers behind that. SoftBank is one of them. As an example, you look at WeWork and the rise and fall of WeWork. Well, the rise and fall of WeWork took a lot longer than it should have because SoftBank existed. If SoftBank didn't back them up on a couple of tranches when things were going sideways, people didn't know it. They would have come and gone much quicker. So I think 21 Capital is something to be aware of. My question then becomes, what is the real architecture and foundation behind the quote unquote treasury company, right? Beyond Bitcoin, is the thesis that there's going to be such an explosion of Bitcoin product that they're going to be able to tap into with their treasury availability of just pure spot Bitcoin, that's going to allow, ongoing and constant upward pressure associated with revenue and earnings, right? I have a hard time. I'm not a big fan of the whole MNAV conversation. I think it's basically made up. It's a made up statistic. And so, these companies have to do something other than own Bitcoin. Owning Bitcoin in your treasury at, 30, 40, 50, even 60%. Well, if you have ongoing entities that are generating cash flow that can be then turned into Bitcoin, and then the multiplier of Bitcoin price movement over time, yes, that makes all the sense in the world. But just holding Bitcoin as, as a thesis, it's just hard to see over the next 3 to 5 years how, it can be done, and there'll be ongoing entities that, will be meaningful, like MicroStrategy. But even MicroStrategy, at some point there's a bottleneck of, okay, we've run out of ideas of how to raise money to buy more Bitcoin. At some point that's going to happen. It has to happen. Heck, get down to the laws of thermodynamics. Okay? Nothing lasts forever. It doesn't. So, it is, I'm just a big believer. Tillman and I are big believers of the balance sheet movement versus treasury. And I think over time, we may see that balance sheet movement win the day. For example, if you're able to marry, a commercial real estate or a some sort of real estate fund with Bitcoin, I think that gets really interesting really fast. If I think you're able to then marry, real estate and ongoing revenues and tax advantaged opportunity to acquire Bitcoin, that gets even more interesting, right?
And
So
that's exactly what Grant Cardone's doing, right? What you're talking
yeah,
about.
so if you're able to offer 1031 exchange tax advantages, or even opportunity zone advantages, or triple net lease type advantages, that again have ongoing revenues that are happening, whether it's multifamily or whatever it happens to be, where you're generating revenues, and at the same time you're taking those revenues and you're pushing those revenues into Bitcoin, and then there's additional actions that happen inside of that entity that are revenue centric, capital, opportunistic, and then tax advantaged. Somebody's going to figure that out, and that'll be powerful. Not that Tillman and I don't happen to be working on that. That's a different conversation, but maybe we are.
You heard it here first.
Yeah, there's just, if you can go to the market and say tax advantaged acquisition of Bitcoin, that's compelling, right? Like, who cares what the deck actually says? Who cares what the spreadsheets say?
Right.
If you can reduce your tax burden by a meaningful percentage and acquire Bitcoin via proceeds from ongoing business interests, that's going to attract a lot of eyeballs. It's just going to attract a lot of eyeballs. And that's not what our current Bitcoin treasury companies are.
Right.
Current Bitcoin treasury companies are asking for fresh capital. It's not tax advantaged. You're not getting a benefit other than, I believe in Bitcoin and I want to find a new way to own Bitcoin that somehow is better than owning Bitcoin. That's what a Bitcoin treasury company is, right? The equity, they're hoping that the value of the equity in the shares is a meaningful multiplier on top of the ownership of Bitcoin, is what they're hoping.
So basically what you're saying is it's not enough as we continue to go forward here just to acquire Bitcoin. You got to make the Bitcoin work for you.
Yeah, I mean, there's got to be additional value that's offered, and again, people of significant means know the value, associated with real estate and the tax advantages associated with real estate, right? There's a lot going on there, especially here in the United States, where just from a regulation standpoint, a taxation standpoint, the United States has made it advantageous to own and then own again homes, right? Like when you sell a house, you're either going to have to pay taxes on that, or you buy another house and you don't have to pay taxes on it, right? I mean, that's as simple a way to explain it as you can. So if you can get that functionality in an entity that then is also buying Bitcoin, you find yourself in a pretty unique way. And I see that, yeah, Grant Cardone is doing this with multifamily, right? But what he's not doing is he's not offering inside of that same fund ongoing entities that may be, retail-based businesses or franchises that are generating huge amounts of cash flow on top of the triple net real estate, doing both of those at the same time, offering tax advantaged entry and then Bitcoin as well. So, it's additional revenue generation, right? So you want to have something that will generate revenues on its own, but then when you add Bitcoin to the mix, it's a powerful creation in the end. So I think those are coming. I think all of that is going to happen as people figure out ways to create new product that is going to be meaningful. Over the past, let's call it 9 months, there's been a gold rush associated with Bitcoin treasury companies. There's a bunch of them right now that are in this position where they've announced that they're doing a pipe or they're doing an RTO or whatever it happens to be, where they're taking over a zombie company. It's going to be a Bitcoin treasury company, or they've created a new company and they're going to take it public, blah, blah, blah. All that stuff is just waiting, right? It still hasn't happened. I think Nakamoto is like 5 days away from officially legally taking over Kindly MD, and then the new symbol is going to be the new symbol, blah, blah, blah. But that still hasn't finished. And we're 3 months away, 4 months away from that announcement. So all that stuff is still got to work its way through the system. So, yeah.
So coming up here, as we're getting into the fourth quarter, third quarter, fourth quarter here, I think you mentioned earlier about IPOs, crypto IPOs coming out here, or maybe we talked about that right before the show.
Yeah.
So which ones are you most excited about? Which ones are you most interested in seeing? Because obviously we had Circle, and Circle just went, popped right up right after. I mean, right as it launched. And
well, it's still at $160. I mean,
yeah.
it's not, it went up to 200 and change and came back down, but it was indicated at 27 to 29 on IPO day, and it's now at 160. So not bad. People that got involved early and got shares pre-IPO are more than thrilled.
Yeah.
I think the same thing will happen for additional firms that come public. So Bullish is a Peter Thiel backed exchange that's going to go public. Gemini, Winklevoss twins, that's going to go public. There's going to be a few others that go public, may not be exchanges. Here's the thing that's interesting about crypto exchanges here in the US and across the globe that most people haven't thought through. So in traditional markets, by the way, all of the machinations and all of the working of how trades get done, how trades get settled, how money gets moved, and how settlement happens, how all of that happens, there's like 3 or 4 or 5 different organizations doing that across a particular trade, right? Yeah. There are clearing companies, right? There are clearing companies that clear trades. There are custody companies that just handle custody when you're holding something. There are brokers and exchanges that manage the movement of money and hold accounts and hold capital. Then there are banks associated with deposits, right? So that's 4 things just in one, just to do an individual transaction, right? And they're all siloed and doing different things. Crypto exchanges are all of those things in one, right? They're all, by the way, investment banks are something else altogether that bring, IPOs and capital and stuff into those other 4 buckets to make them work, right? So crypto exchanges are all of those things. So on Coinbase, you can launch a token, IPO. You can custody your assets, custody solution. You're clearing all of your trades through Coinbase. You're actually executing all those trades on Coinbase, right? And you have your account with your name on it as they're the broker, they're the exchange, right? So that's 5 things that Coinbase or Gemini or Kraken all do in one nicely wrapped thing that in TradFi is a bunch of different other things, right? Like I put a post out associated with, there was the announcement associated with going to in-kind distributions versus cash create. And I said, remember the authorized participants involved in this change are so-and-so, 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 so-and-so. And one of them I put in there was ABN AMRO. Somebody, replied, ABN AMRO doesn't have anything to do with this. And I'm like, no, you're wrong. ABN AMRO Clearing is an authorized participant on BlackRock's IBIT product, which of course is true. And so again, that's just a very interesting world where a bank entity also has a separate entity that's just a clearing entity, right? So there are clearing entities, there are exchange entities, there are custody entities, right? So a bank like State Street Bank or Bank of New York Mellon, you're not walking into those. They don't have branches where you walk into and open an account, put $742 in it, right? But they're custodying $42 trillion, right? Well, again, Coinbase is Bank of New York Mellon, Morgan Stanley, ABN AMRO Clearing, and Goldman Sachs IPO and JP Morgan's IPO business. their investment. They're all those things in one entity. So if you're wondering why Coinbase's stock has moved from, $74 to $374, that's probably why.
Yeah.
That's probably why.
Well, and I think we talked about it previously, the reason why, like Coinbase, why the big banks are looking to partner with Coinbase, not the other way around, because Coinbase is that big dog. It does hold all that. And, if your legacy, if you're the big banks, if, the way things used to be done, you absolutely have to start getting into the way things are starting to be done. And I think that becomes more prevalent when you look at this idea of tokenization of real world assets and 24-hour 24-hour exchanges and things like that. So, I mean, it's a whole product of listen, this is life. This is, as things go into the future, technology expands and increases, and, it allows you to do more things under one roof, and right. You either get involved or you get left behind.
Yeah.
Those are, but we're talking, God, when we think about it, we're talking about big banks. I mean, huge banks getting potentially left behind if they don't step up. Yeah. So I think that's a really interesting thing coming out here over the next, especially the next 5, 8 years or so from now.
Well, yeah, if you think about it this way, again, we've mentioned it several times on this show. Coinbase has 120 million customers. The third largest bank on the planet, JP Morgan Chase, and the most recognized bank on the planet, JP Morgan, has 86 million customers. Yeah. That's a jarring truth, right? Yeah. And so, upside opportunity is really something that, crypto banking the debanked is not just an interesting, industry trope. It's true. It's real life. And that's why those numbers are what they are. And, Coinbase kind of leading the charge and others doing the work that they need to do to, give customers reasons to only host their assets on that platform. That's going to be the nature of the work that they do over the next 5 years. Why should somebody have accounts at multiple places when you can do everything under the sun here? And that's going to be the battle between TradFi institutions and crypto institutions over the next 3 to 5 years. No question about it.
So what do you think coming up here? I mean, God, I'm almost, almost a little fearful asking this question because we've seen such big innovation and such regulatory clarity, in such a short period of time now compared to what we'd had before. So what do you think are the bigger things to look at? I mean, you mentioned one, you talked about these Bitcoin treasury companies needing to actually, make that Bitcoin work for them, offer different kind of products and stuff like that. But what other things do you maybe see coming over the next, we'll keep it short, 5 years, maybe 10 years, as it pertains to maybe not just Bitcoin, but also crypto. Again, we also talked about real world asset tokenization, talk about 24-hour exchanges, anything, big.
Well, we're in a position right now where one of three things could happen. The crypto landscape could get eaten up by, other financial institutions, both partnering or acquiring them, right? That could happen. We could find ourselves where there's this bifurcated world that we still live in as we are now, where you have your crypto and then you have your fiat-based investments. Or we could have a world where crypto pace and speed and velocity is too much for traditional financial institutions to keep up with. And 5 years from now, the Coinbases of the world are dominant, and a sizable portion of the population is using banking institutions to just move money from one wallet to another. Right. The JP Morgan Coinbase announcement about, giving JP Morgan customers the ability to move from a checking account into a wallet was absolutely massive. So it's one of those three things. There's an all or nothing, option. There's a status quo option, or there's a crypto and the innovators in the space really kind of take over. So we'll see. We'll see. We're in a moment where famously, forget his name, but he's one of those columnists that's almost always wrong, and somehow that makes him more popular and probably in more liberal settings. Famously said the internet won't be more interesting or useful than the fax machine 5 years from now. I mean, couldn't have been more wrong about anything ever. So why would anyone listen to that guy ever again? We're in one of those moments where, is crypto going to make good on its potential, opportunistic upside, or are most of the innovators and founders just interested in being bought out for billions of dollars and never to be heard from again? We'll see.
I mean, I can't fault them for that.
No.
Take a few billion, never have to worry about a damn thought like that again, and live your life. It's not a bad idea, but let's be real, people. I mean, Coinbase has only been around since what, 2015 or so, I believe, right around there.
I want to say 13 or 14, but again, there are different types of examples, right? So, the founder of MySpace, cashed an $800 million check and pieced out, and
takes pictures now.
Just still exists. He's just not interested in fighting the larger battles. Whereas Mark Zuckerberg probably had 100 different opportunities to sell and never did, and now Facebook's one of the biggest companies in the world. So, where does it go? Who wins? Because the race is heating up and ongoing, and is going to get hotter and hotter and hotter. We'll see where it lands.
So the big thing in all this with crypto and everything, obviously one of the really big things is the regulation, right? And we saw what it was like before Trump came in. This constant, Operation Choke Point and all this other stuff. Really, everybody getting sued, everybody getting Wells notices. I mean, it was just stupid, right? It's like somebody was over just, you get one, you get one, you get one kind of thing. And so now we get Trump in here and his administration, and they're making it a lot easier for, crypto and Bitcoin and all these things to kind of happen. What happens, do you think, here when his term is up? I mean, do you see, let's say it goes back to Democrats in control?
So for 4 years, we still have another 3.5 years, almost 4 years still, because of, even when there's an election, there's like an additional 4.5 months before there's an inauguration, yada, yada, yada. Yeah. By the way, back to my previous point, the guy that said the internet/fax machine was Paul Krugman.
Krugman, yeah.
Who, again, has been famously wrong about lots.
Him and his spirits.
Yeah. So, but, we're a long ways from that. And innovation can move so fast that, you can't go back oftentimes, especially when that innovation is kind of hardwired, right? The stablecoin stuff is going to be hardwired. The changes in terms of, tokenized assets and tokenized trading and tokenized stocks and 24/7, all of that stuff is going to happen in the here and now. You can't roll that back. So, it's going to be, I don't think we're ever going to go to a place where we get a federal, national candidate that's going to be anti-innovation. There's too much data that shows how destructive that was just in the last election. Like if you were anti-crypto and anti different levels of innovation, you got blown out.
Yeah.
And so, that the power of that particular bruise is going to remain for a while. Think about it this way, like 10 years ago, Elizabeth Warren was a force to be reckoned with. And many people said that for all intents and purposes, she ran the Biden presidency. She's now an afterthought when it comes to policy and whatnot. She got absolutely blown out of all of her meaningful posts where she had any power whatsoever. She's still on committees. She can still rant and rave in any given, committee hearing, but it doesn't matter. None of it matters. So, we'll see, but it's difficult to roll things back, really difficult.
Yeah, I'm glad you said it, because that's what I'm thinking as well. You've got it in there now. Everything's getting in there, and like you said, you got basically 4 years left till the new one's sworn in. And even if they did happen to be a Democrat, I mean, I think it's really hard to kind of do something like that and come back with especially with crypto and everything as fast as it's going. I mean, let's face it, regulators right now are still struggling just to keep up and pass, legislation that kind of, it makes sense in terms of that. So a lot of people out there are worried about it. I don't think, like you, I don't think it's really something we have to worry about too much. There's going to be some attempts maybe to slow it down a little bit, but I don't think it'll be anything like it was previously, where it was this complete, just, it's the devil kind of thing, right? Crypto is the devil. Crypto is evil. We can't let it win. We can't let it have in there. So, well, I know you're getting up close to time here, so let me ask you this. What do you think over the next month or so? What do you think will be the big news potentially coming out?
I think there'll be another crypto IPO that hits in September, be my guess. That'll be meaningful. But again, we're in this situation where quote unquote big news happens every other day in this space. Yeah. I mean, just last week we had, crypto week, and or 2 weeks ago we had that. And then last week, though, we had Project Crypto announced by the SEC. And it was so jarring in terms of its forward thinking, and that Matt Haugen, the CIO of Bitwise, said, I need to readjust all of my even super bullish predictions and thought processes. This is moving way faster than I thought. So, there's not going to be any shortage of announcements and opportunistic headlines between now and the end of September. They'll just keep coming.
The thing, guys, is then just look for opportunities. Stop getting stuck in the idea, oh my God, the top's in, the cycle's over, all this stuff. Yeah. Instead, look for the opportunity, because there's likely to be a lot of that opportunity, at least flowing into the end of the year. And the last thing you want to do is you want to be so concerned about the top being in that you miss all those opportunities over the next few months that could really return, a lot back to you. So, well, like I said, I know you've got to go here, man. So I appreciate you showing up, even though Tillman decided he wanted to enjoy traveling. And like airport stops along the way with children and all that fun stuff. But hey, listen, guys, make sure you're following them. Follow Andrew here at AP_abacus. He's the KOL here. He will proudly say he's got his follow Tillman, Texas OL 61 there on X. Follow me, TXWest Capital. Check out these guys' companies. This guy's company here at archpublic.com. And you can also follow them on Twitter, X there at I believe it's TryArchPublic, isn't it? That's
correct. Yeah, TryArchPublic. We were on Spaces with Scott earlier today, and really great chat, and got our message out about the just massive amount of tools we have for folks. So yeah, come take a look and check us out and use our free tools, and you'll be impressed, and then you decide how much how deep do you want to get involved. So
there you go. There you go.
Thanks for taking the time, Chris. Really appreciate it.
Hey, I appreciate you, man. We'll see you next week, and I guess Tillman will probably be here as well. So
you bet.
You see you then.
Hey, man. Bye.
Take care, man. Thanks a lot. And everybody else, you could jump over to TexasWest Capital. So go to members.texaswestcapital.com to check us out. We still have some spaces left with the 2 times money back guarantee. Nobody else does that because nobody is really, sure about what they're teaching out there, guys. But you join the annual program, the Liquidity Cartography program, and it's just pretty simple, guys. If you're not a better trader after a year, get double your money back. And you can right now use the code TWOX, 2X, TWOX. Use that promo code. You can get half off for your next year as well. So now you get half off, but if it doesn't work out for you, guess what? You get twice your money back. So either way, you're a winner. The one thing I will say about TexasWest Capital is a few times a year, usually I'm giving you a bottom of something pretty significant. So we've been near the bottom with PLTR around $7, which is now $170 something. Hood, we were down there at the bottom as well. Link, SUI, Square, PayPal. What have we done over the last few years? Bitcoin, of course, Ethereum. Just so many that you usually get with us there. They don't. If you take the trade and hold on to it, it'll easily pay for what you get there. So, like I said, you can either learn something there, become a better trader. If you're serious and that's what you want to do, that's what we're here for. Want to deal with serious traders. But other than that, if you get in there and you do it, and for whatever reason, it just doesn't seem to be clicking, when you're participating in everything and we're working with you, it's not, don't stress out over it. You get twice your money back. It's as simple as that. So anyway, we only had originally only 20 seats available for that double money back guarantee and that 50% off. So we've still got some in there. So jump in there and jump on that if you want that opportunity. Once it's gone, it is gone though, guys. I'm not going to put another one in there. And honestly, I don't know when the next time we'll have a discount's going to be. So we've gotten really, we don't do them very often anymore at all. So don't have to. What we do works. So there you go. Okay. Appreciate you guys joining as always. Remember, the only thing you control is how much you lose. Please keep working on that risk management. Y'all have a great day. Trade safe. And if you're in TWC or if you join, we do have our price action session, training sessions every Wednesday at 3 p.m. Central, 4 p.m. Eastern, and then we record it. So you can also watch it then. So we've got that today. Make sure you show up, all right? Y'all have a great day. Trade safe. And I'll see you, I guess I'll see you on Friday for the market breakdown. And then next Wednesday, of course, for Beers and Bitcoin. Take care, everybody.